Dow drops 1,800 points. It's the worst day since March as U.S. COVID cases rise. So, what's going on, guys? Mike Martin's here with the Mike Martin Channel. Thanks for joining me. I sold all my stock Monday morning. I started to see a little bit of red. I sold everything Monday morning. I'm playing the big swings, the big oil swings, big volatile movements. And it's risky, and I don't recommend anyone to do it. But the second I saw a drop of red, I dashed. Now, on yesterday, I was talking about how I sold all my stock on Monday, and then someone commented in the comment section on our live stream, Mike, why would you do that? The feds are pumping the markets and pumping and getting everything, looking good. Like, why are you so, fast to sell, right? You sell. I see red, you sell. So let's go over and see what the market's closed at. Yahoo Finance. I'm going to open it right now so you guys can see. So here it is, guys. The TSX is down 650 points. The S&P 500 is down 188 points, down 5.89%. Holy crap. The Dow Jones is down almost 2,000 points. And the Canadian US dollar is sitting at 73-cent dollar. And crude oil is at $36. It went down. And Bitcoin took a bit of a hit today. And gold is sitting around the 1735 mark. Russell 2000, the 10-year bond, there it is there. Well, wow. Wow, down 12 points today. And there it is there. So I'm waiting for the markets here to open in the next hour or so overseas to give me a little bit of movement, like give me a little bit of insight on what's happening overseas. I think we're going to see red in Australia in the next hour when the markets open. And I think you're going to start seeing red everywhere right now. So, the Dow is shedding. It's going to shed. It's severely overvalued. But I've been playing that feed the animals, right? It's like when you go to a zoo and there's signs that say, do not feed the animals. The reason why they're saying that is like, they're saying that because they want you to respect that, because then the animals become addicted to the food and the crap you feed them. Then they become addicted to it. They become addicted to it, and guess what happens? They don't want to start eating the food they should be eating because they want to depend on the people, passerbys, to feed them. And that's what's happening right now in the markets, is the markets are so dependent on being fed by printed money and bailouts and all kinds of money that's being created to buy up this economy. It's buying up the economy. It's buying up and it's pushing down the real economy, and before we know it, everything is going to be socialized. Everything's going to be owned by the Fed. Or is this the plan they have in motion, right? So there it is there. So a lot of the stocks I own are down big time, but that's okay because I sold. So I'm not crying. I'm not crying the blues right now. So there it is. The Dow Jones Industrials lost more than 1,800 points, nearly 7% on Thursday, as increases in COVID cases deflated optimism that the economy could recover quickly from the worst crisis in decades. The pullback Thursday comes after a market has been screeching higher for more than 2 months at a pace that many skeptics say was overdone, and it didn't reflect the dire state of the economy. Could this have been the massive dead cat bounce? A dead cat bounce, biggest dead cat bounce we've ever seen in history? Could it be that? Because if it is a dead cat bounce, I'm telling you, man, that's a big bounce. A day earlier, the Federal Reserve said the road back to recovery would be long. So it says here, the selling comes after COVID cases rise in the U.S., with some of the increase likely tied to reopening of business and lifting of stay-at-home orders. The number of cases is increasing in nearly half the states, according to the Associated Press analysis. A worrying trend that could intensify as people return to work and venture out during the summer. But in some good news, the virus, in quotations, loosely in quotations, in New Zealand is done. The last COVID patient in New Zealand was sent home, and they're free of COVID in New Zealand. Wonder what's happening. Read between the lines. Investor optimism for a speedy recovery in the economy was also dimmed by the Federal Reserve, which warned Wednesday that the road to recovery from the worst downturn in decades would be long and vowed to keep rates low for the foreseeable future. So they're looking at keeping rates down till 2024 is what they're looking at. These factors, along with the recent run-up in stock prices, and set the stage for the wave of selling on Thursday, said Sal Bruno, Chief Investment Officer at the Index IQ. It's not surprising to see a bit of sell-off given the furious rally we've had coming out of the lows, despite the fact that we had an economy that was doing great, Bruno said. The fact that the Fed is talking about keeping interest rates this low through 2022 is a little eye-opening for a lot of folks. The S&P 500 plunged 5.9% from 3,022 points. The NASDAQ Composite, which rose above 10,000 for the first time a day earlier, slid 5.3%. And what I've noticed that when they're introducing a bail-in or some crap like that, I noticed they introduce the bail-in, they do the bail-in, but it takes about anywhere from 2 to 4 days for you to see effect of it in the markets. I see the markets, not that day, not the day after, but usually 3 to 4 business days, I usually notice the markets start taking effect with the bail-ins. Now, here's the deal. If it's on a Friday, I've seen bail-ins going in on a Friday, and then Monday you start to see a little bit of an uptick in the markets. So I've been watching this very closely, and I've been putting my money where my mouth is, and I've been laying on this big time. I've been laying and playing, right? Some company stocks continue to bear the brunt of the selling, a signal that investors are becoming more pessimistic about a broad recovery in the economy. The Russell 2000 index lost 7.5%. Bond yields fell sharply, a sign of increasing caution among investors. The price of oil also dropped 8% as investors again worried that the slumping economy would need less energy. So here's the deal. Slumping economy will need less energy for sure. Less transportation, less production, less everything. But here's the deal. I saw oil going down Monday morning. This Monday, today is Thursday. I saw it already. And I dropped everything I had. Dropped it like a flash in the pan. Gone. Nearly all the companies in the S&P were down. Technology, financial, industrial, healthcare stocks accounted for much of the market's broad slide. Energy stocks were the biggest losers as crude oil prices fell sharply. Bond yields fell and the price of gold surged as worried investors shifted money into traditional safe haven assets. So it could be crypto, Bitcoin, gold, silver, all kinds of places you could set your money aside if you need to, or you could just pull it out and leave it in cash and wait on the sidelines. I just wait in the investment account, leave it in the investment account ready to reinvest. That's what I do. I don't pull it out as in put it at my bank. There's no point. Leave it in the investment account and wait. Emergency rescue efforts for the Fed. Now, emergency rescue efforts are bail-ins, right? By the Fed and Congress helped arrest the market's staggering 34% skid in February and March. Since then, the market had been riding a wave of investor optimism that the economy will bounce back at the end of the year, if not sooner, as businesses reopen and people go back to work. But confidence in that scenario is waning as infections and fatalities continue to climb in the U.S. and elsewhere. Investors are still waiting for more data to see whether the spike in COVID cases is a sign of possible second wave of the infection, said Charlie Ripley, senior investment strategist, Analyst Investment Management. We think the recovery is largely underway, but there is still some considerable uncertainty on the path we have ahead, Ripley said. If we see some more follow-on of the people coming back to work and consumer sentiment picking up, that will be a positive sign and a fast recovery. So there it is. So this Canadian case is there. And now I wanted to throw something out there, okay, guys? Now, we have New Zealand with firecrackers and celebrations and parades and all excited that now it's over, it's gone in New Zealand, our last patient went home. Now, what if this reverberation that's happening, or this noise, is just to set the markets back purposely? I'm playing the game, I'm watching the game, and I'm playing it. What if that's the case? Honestly, humor me on this. It only takes one tweet to destroy the market gains in a day, and it takes one tweet to see the market take off 2,000 points in a day. Doesn't take much. One little tweet. So, what if that was to, again, basically for investors to sell, like at the beginning of the week, like I did, wait, and then get back in when things start to uptick again and say, oh, no, everything seems to be okay, guys. All is well, and then one more bail-in is going to happen, blah, blah, blah. What if that's the case? So the skeptic investors, or whatever they want to call them, have a chance to restart again. It's just something to think about. This is dated from today's date, June 11, 2020, right after the market closed. Let me know what you guys think in the comments below. Are you in the markets right now? If so, are you playing the big swings like me, or are you just waiting the sidelines because it's too risky? Let me know. Comment below. I'd love to hear from you guys. Thanks for watching.